realize that we're getting this question quite a lot from investors concerned about the dollar value. And not surprisingly, because the dollar itself goes through cycles. So we know that what attracts investors to invest in a country and its currency is the growth in the economy, resulting in growth in the underlying investments, and also when there is a high return on interest rates, which also attracts investors. And this is what happened in the U.S. Since COVID. So with the huge injection of liquidity, the dollar dropped in value because interest rates went to zero, and naturally there was a huge supply of dollar. And then when that resulted in a growth and financial assets rallied, then you had the dollar also rally because investors were attracted to investing in the U.S. And then following that, you had the U.S. central banks tightening the most out of the rest of the world. So naturally also people would be attracted to a high interest rates. And now we've entered the period of the Fed having to ease or the need for it to ease, at the same time and worrying about how inflation will play out. And generally, when the Fed is easing, and again this is relative to the rest of other countries, then that results in a weakening dollar. So I think it is rightful for investors to be worried about the value of the dollar. And that is always relative to other currencies. But at the end of the day, really, what we find as the most prudent approach is to diversify one's currency base. In other words, being 100% in the dollar, one can go through these cycles of dollar weakness or dollar strength. Whereas if one is holding other currencies who might be in a different cycle, so if you see, as an example, this year the euro is rallying relative to the dollar because the euro needs to tighten, whereas the Fed has tightened before. And then the inflation challenge, which again brings to the picture the need to have gold. And gold realistically is a currency or a storehold of wealth that requires to be in a portfolio at almost all times with different percentages depending on the cycles that we are in. So at the end, there is no way out other than holding a diversified set of currencies. And now with the renminbi coming into the picture, that broadens the net.